Hi, everyone. As Albert said, I'm Mike from Deep Ventures. I'm super excited to be here. Thanks for having me. Thanks, Albert, Bitcoin Startup Lab team, and all of you for having me today. So we're going to talk about how to pitch your pre-seed startup, um, aka getting inside the mind of a pre-seed investor without all the crazy Neuralink headgear stuff. So just a quick introduction. Albert alluded a little bit to it. Deep Ventures is an early stage investment syndicate. We've got over 1,200 LPs in our syndicate. We've deployed over 13 million into more than 50 companies in the last 2.5 years or so. We typically invest 100 to 500K checks into pre-seed and Series A startups with some later stage pro ratas and secondaries as well. Excuse me. Our focus is big focus on crypto. We also do investments into AI, aerospace, food tech, and other frontier technologies. So, investors always say they want to put money into rocket ships. We have literally invested in rocket ships. We recently made an investment into a Bitcoin startup. It was our first. Has not been announced yet, but we're very excited to get that out there. And just a little bit on my personal background. I've started 3 tech startups in the past. So definitely been in your shoes pitching investors. I've led growth and marketing teams in crypto, mostly recently with Thesis, who built TBTC, which you may have heard of, being in the Bitcoin space. Worked with Panther Protocol, Utu, and a layer 1 called Meter, mostly early stage protocols. And I've worked in a bunch of different industries, cloud computing, B2B SaaS, even sports marketing. So pretty broad experience. So, all right. Before we jump in, I'd like to do a quick survey. So I've got a couple questions. Please raise your virtual Zoom hand in response to these questions. If you're on camera, feel free to raise your physical hand as well, but those won't count. All right. So who here has a live product? So it could be like MVP, testnet, something someone can touch, use, see. I'm trying to get everyone on. I just got to scroll through it. All right, so very few
Yeah,
of
you
you.
you could another way to do it is if you go to the pictures, right, and go at the top and you see 9 small squares, and
Yeah,
then you could drag it out and then you'll see everyone's
gotcha,
faces. Yeah,
gotcha. Okay,
it's more fun that way.
okay.
Um
All right, so
yeah,
pretty
you
few of you,
gotta
maybe
raise
just
your
a
hand
handful of
too.
you, right? Okay, handful of you, right? All right,
Yeah.
cool. All right, okay, put your hands down. Thank you. All right, so who here has some kind of traction, however you define traction? Okay.
Oh man, you guys better almost all raise your hands.
Really?
Yeah.
Okay. All right. I definitely want to hear more about that. Okay.
Yeah.
You've got about 6 of you. Okay. All right. Hands down. All right. Who here has a really strong team? Come on, everyone's hand should be raising right now, right?
Yes.
You gotta have confidence. You guys got a great team. Okay. Everyone's hands. All right. Some people aren't paying attention. All right. Final question is, do you love me? All right, just kidding. Yeah, keep your hands up. All right. So thank you. We're gonna refer back to those questions as we go through this. So, all right. Now, okay, jumping into more the psychology of the pre-seed investors, right? So, of all the investors, kind of outside of friends and family, we're pre-seed investors are taking the most risk, right? We invest in the earliest stages. There's little to no data, very few signals, unknown founders, and so to make up for this risk, obviously we like to see the largest outcomes, people working on big problems in big markets, right? But in these early stages, what we want to see are signals that may de-risk the risk that we're taking. So that kind of sets the stage on some of the things that we're going to talk about. Now, jumping into kind of the tactics around a pitch deck and pitching. Okay, here are slides that I just listed out, that you should have in your pitch deck. They're all important, right? But there are like tons of articles out on the internet where you can go and read about like what goes into each of these slides. And I think we can certainly talk about some of these, when we get to the question part. I know you'll have questions about them, but like I'm not gonna specifically prescribe to like that slide 4 has to go ahead of slide 8, or the competition slide has to be before the roadmap. Like I'll just talk about more of the things that we like to see, what stands out to us when we see pre-seed pitches, and then you can kind of apply that within the context of your story and how you lay out the pitch deck. So again, we can come back to this, but let's jump in to what stands out to us. All right, and okay. So traction, validation, founder fit, and understanding of go-to-market are the 3 things that pop to us. All right, so let's dig into each of them. So actually kind of surprised about the number of people who said they have traction, but that's great. That's actually a great surprise. So, all right, if you have some kind of traction validation, like shout that from the rooftops. Just push that. And the reason why is most pre-seed startups don't have traction. A lot of times no users, no usable product, hence no traction. So, but if you can show those early signals that you're either built something that people want, or you validated your concept in some way, that shows a lot of progress, and it goes a long way in helping that de-risking for investors. Jay, I see you raised your hand. Do you have a question right now? Was that from
Yeah.
from the survey still? Okay, go ahead.
Actually, I have a question. So how do you define traction in this C? Is a lot of user also shows the traction or validation as well?
Thank you. That Jay was not a plant to segue me into what I was going to talk about next. So you set that up perfectly, Jay. Thank you. Yep, we're going to get into it right now. So what does quote unquote traction look like at pre-seed? It's really more validation and not traction, but let's talk a little bit about that. It could be a wait list of users or developers, or whoever your target audience is. It could be the size and engagement of your community, engagement being more important here because you could definitely gain size. So like Twitter, Discord, whatever that might be, if you've got a highly engaged audience there. It could be letters of intent from launch partners. Could be, if you're building a DeFi, it could be liquidity commitments from liquidity providers, right? So some signals that show that there's a high level of interest, and that what you're building is solving a problem and adding value. So Jay, does that answer your question?
Yeah, definitely. Thank you.
Okay, cool. So like there's no doubt pre-seed is going to be a lot about building of the product, but you should definitely be thinking about validating your concept in the very early stages of your company. Because I talked about like pre-seed investors taking on a lot of risk, but you all are taking on the most risk, right? Like you're dedicating your days, your nights and weekends to your startup. There's stress, there's anxiety. So like finding the validation and de-risking, validating your concept is a method for you to de-risk for yourself as well. So it's it's in both of our interests to validate that concept and make sure you're building something that people want. All right, if you don't have traction, which we saw many of you don't, so it becomes all about like the narrative and the vision and why you're the best team to achieve this vision. So let's jump into that. Let's get away from screaming Oprah here. Okay. I don't know what you all think of this guy. I tried to get Satoshi's story into my deck, but we do not know enough about him or her. He or she has been done a great job to stay anonymous. and I didn't have enough material to make my point about founder fit. But let's break down Vitalik's story of why he started Ethereum. Right, he quit playing World of Warcraft because his Warlock's Siphon life spell was taken away from him. I haven't played World of Warcraft in decades, so I can't really speak to what that means anymore. But that's what happened. And it might sound silly to some, but like this event ignited his mission against centralized services, right? Blizzard Entertainment screwed him over royally. Now the man's on a mission to decentralize the world, right? That brought him to Bitcoin. He fell in love with it and its principles. He co-founded Bitcoin Magazine. He's got a technical background. He was a comp sci major from University of Waterloo. He drops out of college to pursue his mission. I believe he was like a Thiel fellow as well, so it's a little bit more validation. So it's like clear he has, number one, the drive, the skills, the knowledge and experience to, maybe the experience was missing, kind of like, but like, he co-founded Bitcoin Magazine and things like that. So, maybe not so much in years, but in activities. He's got all that, checks all the boxes for founder fit of Ethereum. So, apply this to your story. Like, why are you working on your problem? What was that moment of reckoning that led you to start to solve the problem that you're solving and build what you're building? Why does your experience and skills make you the best team to solve this problem? And like when you can tell that story like clearly and concisely, and it's like believable and engaging, it's like magic. It's like you can see, you can see how a story like that like inspires investors and like gets them to sit up in their seat and jump on board and help you to achieve your mission, right? So like, I mentioned traction first because I think that's the most rare thing to see. But at these early stages, founder fit and that story and that narrative is, I think, the most important signal at these stages. All right. So the third thing that pops in our eyes is an understanding of go-to-market. So I think in general, like a lot of pitch decks we see, especially in these early stages when I said, a lot of it is so much about building the product. I think a lot of teams kind of gloss over this in their decks and presentations. And the ones that do it well they stand out to us. So again, like, look, great tech is amazing, right? You have to have good tech and product. We invest in deep tech where we love technical founders. Tech can be a differentiator in many of the companies that we invest in, but you have to understand the importance of GTM and growth, because we know that the best tech doesn't always win, and the people who understand their customer and are closest to the customer in the early stages and throughout the life cycle of a company are the ones that win. And like especially in blockchain and crypto, like a lot of what you're building is going to be open sourced. So tech by itself almost can't be your moat. And your strongest and maybe your only moat is going to be your community of customers, users, etc. So that's why like a deep understanding of who your target audiences are and how best to reach them now and over time, and that strategy for the long term is really important. And looping back in founder fit, you also want to communicate that you have experience working with these target customers. You have the network for you to be able to access them. So all right, let's do a little exercise here to kind of highlight this. So many of you I've just kind of pulled out an example. Like, so let's say you're building like a DeFi lending platform on Stacks or some L2 for companies to access loans permissionlessly, right? Some of you may be building just that. So like, okay, so who might be your target audiences here? Raise your Zoom hand if you want to jump in. Don't you all jump in at once. Anyone here building lending? Okay, Jay.
I'm not building landing, but
Okay.
I think a project is building landing on my rollup. But I think
Okay.
if a landing platform, the first audience or the first users could be someone who already do landing on Ethereum and holding some Bitcoin assets.
Okay. So so you're saying people who are already backing loans on Ethereum, but want to
Yeah.
do it on Bitcoin now,
Yes,
right?
I think that.
Okay. Very cool. That's a great answer. Thank you. So okay, so let's dig into there, right? Like these are the people who are supplying the capital for these loans. Are they financial institutions or are they individuals?
I think individuals.
Okay, individuals, cool. Like, so what are the characteristics of these individuals? Are okay, so you already said that they have experience doing it on Ethereum, they've got some Bitcoin, that's great. Do you think you know, let's just pretend, Jay, we're going through this exercise, you're building this platform. Like, yeah, what's their risk profile like? What are some of the other characteristics of these people that that are providing capital for these loans?
So we are talking about liquidity provider, and I think their characteristic is that they have Bitcoin assets like BRC20 or whatever asset we are referring to, but they want to earn yield from these assets, and they are seeking for all the solution. Maybe not lending, maybe they already tried other ways like mining that will earn yield from Bitcoin. So I do think they have a character that seeking for interest, seeking for yields. So I will find other ways to make yield on Bitcoin and try to reach out to them.
That's great. Okay, so you've built this very nice profile, specific profile of these liquidity providers that may participate and back loans on your platform. That's exactly what I'm looking for. All right, so what's another target audience? Someone besides Jay.
Yes. So
Well, here,
also some.
Jay. No, Jay. I want someone else to jump in. So thank you. appreciate your help. All right, Shakira.
Yeah, Mike, thank you. So I would say from perspective of users, I really talk really often. So I would say degens who already like actively investing and they have their bags. And let's say it's bear market and they don't want to sell their assets. So they just want to put them on the lending platform, get some BTC to do more, to invest more. And then once it's, so they pay this loan, and then once it's bull market, they just probably won't use it. So maybe this this approach.
Okay. Wait. So are you still talking about the liquidity providers or the ones who are borrowing?
The ones who are borrowing.
Okay. Cool. Yeah. All right. Good. So now so we're saying that you're building these loans primarily for crypto degens who want to get more money or get more crypto to be able but not sell their bags and then use those loans to kind of get into the bull market and invest more, right?
Yeah.
Okay, cool. Yeah, so that's what I'm saying, right? Like thank you for walking through this. Let's see what thanks you. Let's see what Rafa has to say.
Yeah, Mike. So on the people who provide liquidity, we can think of Bitcoiners who were already using kind of like more centralized CeFi solutions back in 2022 before the bankruptcies and so on. So people who were already doing it kind of at a level that is more than just degen sort of thing. So yeah, I would think of, for example, someone like, I don't know, someone comes in mind like Dan Held, right? He used to kind of like grade those different solutions in terms of how secured and how, and the yield and so on, and give advice to his own audience.
Awesome. Okay, thank you. All right, let's go to the last one. Simov. Did I pronounce that right?
Yeah, sure.
So,
So I think high net worth individuals who want to generate a stable yield with less risk than day trading. That kind of high net worth individuals can be the one of their customer segments.
okay, great. So there's no wrong answer here, right? But what the point that I'm trying to say is that for if you are specifically building this platform, this lending and borrowing platform, you need to like get very specific into what these audiences look like. What are the characteristics of them? What experiences do they have? What are their needs and wants? Because to tell you the truth, a lot of times we don't in our decks, it doesn't get that deep. So we're like kind of peeling the layers of the onion and getting deeper into the knowledge about these target audiences and these customers, and like also finally kind of rolling the founder fit into it. Like, how are you going to reach these people? Where do they reside? Do you have existing relationships in the space that you can leverage to reach these people? So all this matters. And a lot of the pitches that we see, they just kind of stay on that surface level of understanding their customers, and the ones that show a deeper understanding of their target market and how to reach them gives us a better signal that they may build a more successful product and organization long term. All right, so just wrapping it up. Okay, so again, going back to that one slide I had that included all the slides of the pitch deck. All of those slides are important, right? Talking about the tech behind the product is very important. Business models, competition is all important, right? But in our eyes, the three aspects of a pitch that are the differentiators, the one that really pop out to us and get us going, is number one, traction and validation, because very few pre-seed startups have that validation, and it's a really good way for us to understand that there's been progress and that you're on the path of building something that people want. Founder fit, that engaging, cohesive, inspiring story, and the understanding of GTM, that deep understanding of your customers, much deeper than that surface level understanding, and how you access them. So these are the three areas where pre-seed startups can really separate themselves from the pack in our eyes. And look, like a pitch deck should reflect the work that you're doing and the progress that you're making every day. It's not just a deck that you kind of put together when you're only out there fundraising. It could be an internal deck that you provide to your founding team, or the team that grows past your founding team, that gives a nice update to everyone in your company, right? So all of these things that I highlighted, they're all intertwined. Early stages, pre-seed, your devs are primarily building out your product, but who are you building product for and to solve what problem? You need to identify and talk with these customers to learn about these problems. How do you find these customers? Do you have existing networks of these customers? There's that founder fit. And these customers may become future users, which is real traction. So, all of this works together, hopefully in a nice, cohesive story that you can tell investors when you pitch. So so that's all I have right now. I will open up to questions, feedback, rude remarks, anything. Jay, you got another question?
Yeah. So my question is, as we're speaking of the founder fit, and usually we have several co-founders, right? So should we equally describe every co-founder, or we emphasize one that related to project most?
Oh, so are you asking it's about the team, really. So making sure that the founding team complements each other and covers all the things that you need to be successful, right? So a lot of times, so back in the day with like Web 2, really the core team was a technical, a business, and a designer. Building a Web 2, I've done I've launched 3 of my own Web 2 startups, and that is friggin' hard. But launching a Web 3 startup is like ridiculously hard, like way harder, because you have to do all those 3. But tech needs to be stronger. You also need to understand community building, tokenomics, and just regulation. Like there are so many more vectors in Web3 that need to be covered, and it's going to be really difficult to get all of those skills in an early stage company with 2 or 3 of you. But it's more about like how does your experience and background really and that kind of that reckoning, that story of like that the spark that led you to build what you're building, how that all fits together, as opposed to this founder has this skill, this founder has this skill, this founder has this specific skill.
Yeah, I see. Yeah, that's good answer. Thank you.
Welcome. Any other questions? You can just jump right in. Any feedback, rude remarks, questions, anything? Lay it on me. So if there are no questions, Joshua.
Hey, yeah, thank you so much for this. I had a question, just digging more into the founding team. Like, is it, I mean, like if each co-founder has a fit with a certain part of the business, does every co-founder need to have a deep understanding of the customer specifically? Or is it okay if like one co-founder has a deep understanding of the customer and the other one has a deep understanding of, say, like the type of solution that's being provided, or you know what I mean, like just some other element of the business?
Yeah. In general, the ideal situation, everyone will get as close to the customer as possible. Again, that's the ideal, but you're likely, there's so many things to do, and so little time for everyone to jump in on like a user testing session or a customer development call. So usually there's going to be one person who might lead that, who might be the one who does the initial outreach and organizes the call and sets all that up. And likely that one person is going to be the one who has more of the skill in doing that and more of the experience doing that. But overall, the closer that the entire team can get to the customer to really understand the problem and then translate that into a product to solve those problems, the better. Again, that comes with the caveat of everyone being super busy, and it's hard to achieve that, but that's the ideal situation.
Thank you.
Sure. Oh, go for it, Shakira.
Yeah, thank you for the presentation, Mike. It's super useful. So I have one question. Are there any common mistakes or like red flags that founders have, like on the pitch day or like in general, that you're looking at, and maybe you can advise us to avoid or give a tip or life hack?
Yeah. I think potentially like over indexing on specific subjects within this pitch deck that you can see on the slide is kind of a, I want to say it's a red flag, but it doesn't, the idea in a pitch is to kind of, especially in these early pre-seed stages, is to primarily tell that story of how you came to this solution that you're building, the problems that you're solving, and how you fit into it, right? And I think if someone just over indexes on just the technology, I think that is something that it is, I wouldn't say it's like a massive red flag, but like it doesn't really show an understanding of like everything that is needed to build a business and out of these early stages, and grow into a larger business, sustainable one. And I think that in terms of being like, just kind of showing that like, if there's a founder that's just like building in a space that is just like not a space where they just have there's no you can get a feeling of like there's no reason why this founder can be building in this space. And a lot of it is a lot of new builders are going to be building in new space. Like not many people have ever built in Bitcoin, right? But if you are just jumping in from a very random industry to building a Bitcoin, you better have that kind of good kind of narrative, that story, and it's not like just like a money grab, right? I think there are some red flags around tokenomics that maybe can show that there's not a long-term view of what the company might be. So that, I think that's sometimes a red flag. And yeah, I think, it's more of a kind of a live pitch thing, and not so much you can see it through a deck. But, I think one of the things that you just want to see in founders is just like being very passionate about what you're talking about and what you're building. So, as a founder, I think that is certainly one of the key things that you need. Is like, times are going to get tough. If you're not excited about talking about your idea for like 5 minutes or 10 minutes, 10-minute pitch, like how excited are you going to be when when you've got a bunch of bugs in your code that causes the product to break, or community members who are leaving your Discord, or or things like that, customers that aren't jumping on board. So yeah, kind of showing that passion and showing that that drive, that interest in what you're building, is definitely something that is going to be needed and needs to be shown when doing these pitches.
Yeah, thanks Emilian for sharing. Appreciate it.
Sure. Rafa?
Hey, Mike, everything you said makes a lot of sense to me. These 3 pillars that you described, basically.
Wait, sorry. Before Rafa gets into his question, I want to ask this question because I think it's important. So, and this is a controversial topic, but I think it should be faced like head on, right? So, Shakira is going to be pitching. Obviously, she's female, and then the investment culture, right, is definitely like skewed towards males. This is like sort of is this a reality? So I'm not going to get into if it's wrong or right. Is this reality? So what can females do to get a leg up, or at least be as competitive as male pitching? Yeah,
it is. Yeah, you like you said, Albert, is like there's no right or wrong to it, but like if you look at the numbers, there clearly is an imbalance there. And why that is, I think we've got some speculation there, just in terms of like you know, in both in tech and crypto is just there's just overall there's just more males on both sides of the table, more males building, more males funding. And what can they like? It's I don't see that females need to do anything better than males when they're pitching. If they check all the boxes, highlight all the things that I highlighted, we are just as excited to fund females as to fund males. I think many people just have these just high they want to see females be a little bit more forceful and outgoing, right? But at the same time, it's weird when like females are forceful and outgoing, males sometimes get taken aback by that. So there's this catch-22 that's almost impossible for females to to do what male investors want to see, because it's both they say that's what they want to see, yet they are many times taken aback by it. So, I want to say that I don't think there's any, personally, I don't think there's any difference. I don't think there's anything that females need to do that's better. But I just think you just have to have as much confidence as anyone else in the room. You have to know your shit just as much as anyone else in the room. And then, I think that's just do what you need to do. If you are, just all the boxes that needs to be checked with that I mentioned, if you've got traction, great. If you've got that founder fit story, amazing. If you understand that GTM, amazing. If you're building a great product, just be confident in pitching it. Just show the passion for it, just like anyone else needs to show the passion for it, and tell that inspiring story. That's all I have to say on it. It's just like a tough reality. But when you get to the nuts and bolts of it, I don't think that there needs to be any higher standard, and there should not be any higher standard for there. It should be a level playing field, and great companies are great companies, great founders are great founders.
Yeah, thanks for that, Mike. Sure. Yeah, that's like being confident is really like important, right? Like all the mechanics, checking off the boxes, and then having that air of confidence, which I mean, this is a virtuous cycle. The more boxes you check off, the more confident you'll be. And in the end, investors, they want to invest in the top projects in each category. So it's really about getting at the head of the pack, or top one, top two.
Yeah, I mean, you just execute, right? Like a bit a good protocol, a good business. It's just doesn't matter who's building it. Like, it's going to be a good business. As long as the person building it has that that founder fit, right? So I think it's it's unfortunate to see the how skewed it is. And Albert, thank you for bringing that up, because it is something that as it is a controversial topic. But I think that we want to fund the best founders, fund the best teams with the best ideas who can execute, no matter what the background comes from. All right, go for it, Rafa.
Awesome, thank you, Mike. Do you have a method for filtering out those you believe will persevere? Because we know how hard this is, and let alone in the Bitcoin space. Do you have a preference of category of startups that you would like to invest in the Bitcoin space? And how many mandates do you have? Like, do you have like a mandate that you have? Like, how many deals do you have to invest in this year?
No mandates. With the syndicate model, is we go on a deal by deal basis, and then we sell the startups. The startups, we do the scouting of the startups, we do the diligence, talk to the founders, learn about their business, and then for the ones that we really like, we will then do the research, do the research, do diligence, and then pitch those to our LPs on a deal by deal basis. So we don't have, we are raising a fund at this time, and then some of those mandates might come in, but right now we don't have any mandates. So we really we get our choice of like, we want to invest in the best teams, and especially at these early stages, who are making a lot of progress. And I think in the Bitcoin space, it's pretty early, so we like to see the infrastructure being built out. Like I was saying, I was at the Ordinals conference in I guess that was April or May, and like it felt like kind of like Ethereum in like 2017, 2018. Like there's so much innovation, there's so much curiosity, there's so much experimentation, and I think a lot of that is going to be in the in kind of like the core infrastructure, and then build a lot of things in the overall Bitcoin ecosystem will just get kind of built out from there. So yeah, we definitely looking at that infrastructure space. But we've made plenty of DeFi investments in the past. And yeah, we're there are some spaces that we gravitate to, but overall we've got an open mind, and we're really interested in this space. I do think because we have this syndicate structure, there's a lot more kind of education that we need to do for our LPs to be able to get them to learn a little bit more about the Bitcoin space. And I think just in general, overall, there's a high amount of education, and Albert is doing a great job in distributing that education and raising the profile. But yeah, I think we're really interested. This is a very, very nascent space that has the benefit of learning from all of the mistakes that were made by other layer ones and other ecosystems, and I think it could really take off because of that. So yeah, long answer to your question, but yeah, hopefully I addressed all the points.
Yeah, excellent. I have a follow-up question, if I may.
Sure.
Yeah, how do you make the decision, like in terms of not only the governance, you mentioning you have a syndicate, so I'm curious like how that process goes in terms of like making the decision. And the other side of the coin, I forgot. Yeah. At what point do you see like, hey, this is actually like, what's the tipping point in terms of like, hey, I'm going to invest in this and it's going to serve the purpose of I don't know, like accelerating the growth of that early stage platform?
Yep. So this is like a very hand wavy initial filter, but like the first thing I see is like, okay, if I take a look at pitch deck, I'll be like, all right, does this thing grab me in terms of the idea? Like, is this something that is like, oh, this is really interesting? And it's hard to describe, but like at that very first look, when I like review a deck before I even talk to a founder, the founder may have like pinged me on Telegram or messaged me or emailed me. And the way that they get to the how concise they describe the idea, and then I look at the pitch deck, I'm like, okay, this is super interesting, right? And a lot of Bitcoin stuff is very interesting. And a lot of like infrastructure stuff, like I mentioned, is very interesting. But then I start digging into that founder fit. I'll look at those three, how they tell their story, if there's any traction, the understanding of go to market, and then jump on a phone call with them, and then have that conversation. You can definitely get some feelings about their passion for the project, their knowledge about the market, and how there might be some white space in the market for them to attack. So it's not like anything different than a lot of the stuff that I talked about on this presentation. But yeah, it's more done on a personal level as opposed to just a pitch deck. And You know, we have kind of a internal like rubric of like, you know, we'll rate some things, and you know, we'll say this team is stronger than others. You know, we'll talk to some partners, if they have some, you know, some early stage partners, like launch partners, things along like that. But it comes down to just like, you know, like I said, at these very early stages, there's so few signals, that, you know, really boils down to whether or not the founding team has that fit, a strong narrative, a strong vision, and yeah, how have they validated that vision so far in these early stages.
Yeah, thank you
So
very
I don't
much,
know if you
Mike.
want to learn more. I didn't know if you want to learn more about what happens after that, but like we'll just like write up a deal memo, and then we start selling to the yeah, to our LPs, and then, you know, there are different ways that we can get LPs interested, but yeah, that's and then we, you know, we put in some of our own money, but yeah, that's kind of the process from there.
And then it's on the LP basis, I'm assuming. Each LP is sovereign in deciding to invest their own money.
Correct. Yeah. I mean, there's some conversations that we have with, you know, like in chats and everything like that. You know, there's questions and we answer questions. But yeah, then it's up to the LPs to you know, it's on to us to gather the money for the, you know, for the ones that we're, you know, that we want to take to investment. But yeah, I mean, we're gathering it from our base of LPs.
Makes sense. Thanks a lot.
Zimov, go for it.
Hi, Mike. Thanks so much for your eye-opening presentation. My question is, I'd like to know more about the next steps after you check our pitch deck for the first time. So, what happens after that?
I don't know, Albert. Like, so you're saying like if let's say like after you're done with the accelerator, and then I look at a pitch deck, or like, or actually like
I mean,
today.
What was the question again? Can you say it
typically,
again?
when you receive a pitch deck and you check it, and then you are going to have an interview with the founders. And,
okay, in general.
That's it.
In general, okay, not after this. Okay.
Nothing else needed from the founder side, just the interview.
Yeah. So, you know, if there's a pitch deck that I like, and, you know, I'm interested in, you know, we'll reach out to the founders, have a call with either me or my partner. You know, we'll just dig into we'll dig into the pitch deck, you know, learn about the backgrounds, learn about, you know, how they came to start building, why are they building, why are they the ones why they're the right team to build this, and, you know, a lot of times we'll dig into the tech as well, where, you know, if there's things about the tech and the market that you know, we can't dig up during our due diligence. You know, I know you guys do a lot of research, and you know your markets better than we can. We're just trying to get to that level of understanding that we feel comfortable about how that market operates, and then, you know, how you would fit into that market, and then, you know, as we keep digging, there's a lot of back and forth there where, you know, we'll have more questions, and you'll have some answers, or yeah, and then, you know, we will get to a point where, you know, we don't want to drag it out too much, because look overall, you know, me being an entrepreneur, like, fundraising is like a pain in the butt. It takes you away. It's very necessary, right? But it takes you away from like operating your company and building your company. So we don't, you know, if there is, if we can get back to you as fast as we can, sometimes it's, you know, it's like we're still doing research and due diligence. But if it's a no, like, we want to get back to you. We don't want you to reach out to us, because we want you to be, again, because we want you to go back to your to operating your startup, and like don't waste time on us if we're not going to invest, right? So it's much more, we want whether we invest or not, we want you to be successful. And at times where maybe we're not to the level where we are interested in investing, but we are happy to make introductions to others who may be interested in investing. But bottom line is we want you to get back to building your business as fast as possible. So, there's always going to be some time and back and forth, but like we want to get through that process as quickly as possible. But we want to get enough information for us to make a thorough decision on whether we want to go to the next steps of investing or just say no.
I see. So, how long does it usually take for you to finalize an investment decision? Is it weeks or months?
A lot of it does depend on how long that due diligence process takes and how much research goes into it. And also, when we pitch it to the syndicate, we try to make the process as fast as possible. I will also say that this is no one's fault at all, but like if it's a bull market versus bear market, it's just the reality is that like people are happier and have more money in bull markets, and they're more willing. I mean, it's funny, some of the deal memos that I've seen, this is before that I started working with Deep Ventures. You'll see like the bear market deal memos are like 4 or 5 pages long. They dig into the founders' backgrounds. There's the in-depth market research, and a bull market deal memo is like, we like the founders, give us money. Like it's pretty it's pretty stark difference. So that matters as well. But that's that applies to everyone. But like typically it's gonna take a few weeks of due diligence, pitching to the investors, and then getting everything wired.
Right. Thanks for answers. I appreciate it.
Sure. I think we go back to Rafa, I think.
Oh, sorry, I didn't know I have my hand up.
Okay.
But I can ask a question. You typically have a deal flow, right? That's coming up to you, and do you also like entertain like relationships with founders, even if you didn't invest, and kind of like advise them on a few points that they can improve or things they can show for you to actually consider an investment?
As time permits, definitely. I think like coming from being a founder, I want all founders to be successful, and whether or not we fund the founders or not. So I think certainly there's going to be some let's say like certain fit for us to be like an advisor or something, right? It's going to be in a space that I feel that I have expertise in to be able to help you. And obviously it's going to be something where I got to be interested in spending time on. But even then, like, if there was if we went through a process, let's say Rafa, we looked at your startup, and we got to the point where we're doing a bunch of due diligence and doing a bunch of research and getting to know you, but we just didn't get to the point of an investment. I would still love to just stay on your email list or whatever, and hear the updates, right, and see how you progress. And maybe that turns into an investment later on, maybe not, but like still, if there was some level of interest there that maybe we couldn't get into investment, but like still, I would love to see the progress that you made, even though we didn't invest. So short answer is yes.
Yeah, fantastic. Makes a lot of sense. Thanks.
Sure. Joshua?
Yeah, I was wondering, you mentioned AI being one area that you have an interest in. And
Hey,
I was
I'm
just
having a little
wondering.
problem hearing you, Josh. Joshua.
Sorry about that. Is it better now?
Yeah, it's better.
Okay. You mentioned AI being one area that you're interested in. Is there like a certain aspect of your investment thesis that, um, as to like why you're really interested in it, or is there kind of like a first principle, or what intrigues you about that?
Yeah, so I will say that it was not, we did not kind of do the AI is hot now pivot to AI. My partner has been doing AI for decades. He did machine learning. He's a comp sci. He did machine learning for like Yahoo and Ask.com, but Ask.com. Like I didn't even know Yahoo and Ask.com had machine learning. And now he's building like AI compute on the blockchain. So that has kind of like his initial expertise, and my expertise comes a bit more from the crypto side. And I think AI, I think the crypto plus AI combination is something that is super interesting. There are a lot of ways that they can work together. I think the way that we look at AI is definitely more. There's going to be a lot of good startups who can kind of put like a wrapper on ChatGPT on GPT-4 to solve some problems. I think a lot of the things that we've invested in AI is like, how do you go deeper, right? It's like how do you what's the infrastructure for like getting data into LLMs? How do you tune, what are some models to like tune LLMs for different specific use cases? Getting a little bit more into the technical side, instead of just kind of like putting a wrapper. Again, like there's going to be a lot of good companies that come out of leveraging GPT to solve a lot of problems. No doubt about that. But then we kind of go back to the team on that. Like, how do they understand? Do they understand the tune models? Do they understand how they can really tweak and leverage GPT in novel ways to be able to solve those problems better, instead of just kind of putting a front end on it. So yeah, that's both our how we got into AI as well as what we're looking for in companies.
Thank you. That was really helpful. I appreciate it.
Sure. Yeah, so that's all I have. I didn't know if you did, I have this kind of the pitch deck slide up. I don't know if there are anything specifics that you wanted to talk about with specific slides or things, but I know we're running up on time. But yeah, I'm happy to answer any questions offline or yeah.